Hello, Warriors. ECB Day. How you doing? Jerry Povic, Richard, AJ, Sinatra, Ryan.
Morning, mate.
How are you, buddy? So,
you?
I'm doing okay, buddy. So, tell me, with Euro up 36 here, ECB make their announcement, have the presser. Presser's not yet, is it?
No, it's tomorrow, mate.
Oh, okay. So front running the whole deal, huh?
If you're front running, you're doing all right.
Yeah. Okay. So, you and Stel were saying that you thought they'd be more hawkish. So I think that came out on the Reuters wire. That Stelios and
that I was saying
Ryan.
it.
Yeah.
Morning.
Yeah. Good morning. How are you?
By the way, I did say yesterday I think they're going to do 50 in June. I meant July, obviously, not.
Okay.
Not tomorrow.
Oh, that old chestnut going backwards now.
Yeah, and this is trying again too.
I did wonder.
Right.
It did June. I thought that was a bit.
Yeah.
Close over 86. That's going to look pretty good, man. So
I still have a firm bullish bias on this.
Yeah.
I think it's going higher. I think we're heading to the 90s, I think.
And I saw something interesting right here. What time frame was it? Yeah, you have like a descending triangle in silver. And although the measured move would take out this low, it still would be above 21. So let's call it 94. So call it 56. So 2130, 2120. If we break down under this little descending triangle, is the way it looks to me. And I'm a buyer at those objectives. Here's a clearer picture of it. Say that, and being contained by the 200. So under today's lows, it's held it a couple times. I think it's going to take it out. It's trying it too many times and giving, this was a tough buy. I understand why you didn't buy it here. So Mr. Market says, hey, you know what? I'll give you another chance. Oh, you were at the doctor's office. Okay, don't worry about it. Here's another chance. We'll let you in here. It'll give you about 3 weeks to recognize that's important support. So anyway, I think they're setting the table to flush it under there. That's about it. Currencies are, what yen.
Good morning, Dale.
Good morning, Kman. So, it's always hard, just like it's hard to buy the bottom, it's hard to sell ride it all the way to the top. What's happening here? Just more of the same. And
yeah. And Kuroda again overnight, not giving any food to yen hawks whatsoever. But again, as I said, we're still a week away from the Bank of Japan, and he did surprise in the past. So, but if they don't mention anything about even starting to talk about normalization, well, this market, the speculators, the model funds, you name it, they will continue to sell yen. But I did actually around here take my profit today in CAD yen.
I saw that exploded to new highs.
Yeah, and because there's a few decent levels coming in around 107, 107 and a half, and I just want to watch what's going on. Also looking at the speed of the latest moves, and there's a market talking about barriers from 134 up into the 135 on the dollar yen. So it might slow down, and if not, do that quick jump and then reverse a little bit perhaps. But I'm just keeping my account happy here, and it's like a bit over 4%. I'm happy.
Yeah, and you talk about inflation. To buy a 6-pack of natural light is now $9.29.
Yeah.
Oh, that's natural gas. And I thought it was the price of natties.
Yeah.
I know Blake has had a natty pack in his lifetime. Can you believe that, buddy? Almost $9.29 for natural light.
Oh man, for natural light.
Yeah, look, 9:30. Natural. Oh, it's natural gas. Oh, okay.
Yeah, natural light is the beer of 18-year-old champions. Good morning, everybody. By the way,
too, man. All right. So you want to jump in here, buddy, or we're?
I'm more than happy to jump in and say a few things. I mean, first of all, I gotta congratulate Kman. Great call on the yen, and the daily sentiment index is registering at 9, which is a really. I guess I'll take over the charts, Dale, if you want me to. I know it's kind of early, but I guess we got to look at these yen pairs. And you look at the dollar yen, we're nearing the 161% extension. And you can see that this 134.50 level should offer some pretty good resistance. I thought it would have stopped yesterday after the flag, but as Kman pointed out, I mean, Kuroda's not given anything back. And you look at all of these other yen pairs, like the euro yen. Remember, we closed the week at breakout territory. It's something we talked about in the week ahead video. The Canadian yen as well. I mean, look at that move. I mean, that's insane. So I gotta ask you, Kman, what prompted you to take profits here versus waiting a little longer?
Longer term charts for one. There's an old top around here as well. There's the 2014 top in that's the one. It's around 106.5, and then we've got a few ones even earlier from 2008, which are around 107.10, 15. And then looking at the level of dollar yen and the speed of the dollar yen, it can go further, but I just want to bank it. I was already tightening my stops, and then when I saw those two levels, we're in the middle of it. Just why not? Keep my account happy. So,
well, I don't disagree with you. I was long the sterling yen earlier this week. I'm going to go ahead and blame Benedict for that, for the break from 164 to about 166, and I booked profits because I was like, we're approaching some previous support over here, and but it's like as soon as you do, everything continues. I guess there's no you never the old saying is you never met a rich man or a rich person going broke taking profits. So taking profits along the way is always pretty wise, but man, these things are just on a tear.
I think it's important to note today, and we've been speaking about this morning. It feels like this is getting more into speculation moves, because if you look at yields, you pop up the 10-year, it's lagging behind. And these two have been arm in arm the last few days.
Good point.
But dollar yen and yen pairs are running away, and yields aren't following, or they're not leading. So to me, I think this is more speculation, which means it could get more volatile. Could mean that we get more fun and games with the officials in Japan if they reason that this is getting more speculative.
So I know the natural inclination is, as a trader, Ryan, is to just start fading this move. You see the correlation breakdown between the 10-year and you're like, well, dollar yen's been following the 10-year quite actively, and well, we can add the this is the 10-year yield, so we can add the dollar yen to this, and you can say I've seen this breakdown where the dollar yen breaks higher and the 10-year is not. But what other factors are there that we should be paying attention to? Like
energy.
I'm sorry?
Oil again. There's been talks about the spare capacity for more production being extremely low, and oils are pushing higher. So that's energy higher. That's another factor that's been driving yen over the past year and a half.
And I was talking with a couple former Marine infantrymen last night. Two of them that one of them manages a hedge fund, and the other one used to manage a hedge fund with him. They were pretty bullish. One of them was pretty bullish crude oil, and I'm like, why shouldn't you be? I mean, the price action in crude is very bullish, even though it's up against resistance. We've noted the 120, 121 level, but yeah, I mean, as crude continues to move higher, I mean, that's just going to have a negative impact on the yen. It's just kind of a negative feedback loop for the yen, isn't it?
Yeah, same for inflation.
Yeah, I mean, and look, take a look at the S&P. The S&P, and I'm gonna just do this for you guys so you can kind of see it. The S&P is in the orange. One of the things that you can't see in this line chart, the specifics, but I'm just going to give you a kind of a roundabout figure if you're looking at like candlestick price action here. The S&P is really, kind of nudged up against some resistance intraday. And how about if this breaks higher? Do you think that the yen will continue to weaken if stocks go higher? Because it's like, I look at risk on or risk off, and I look at, different tools that are used during this type of environment. One of the things would be, and you see it in risk off, when there's risk off, the yen strengthens, then that'll stop. Then it passes over to the dollar starts to strengthen, then that'll stop, then it'll pass over to gold. And you kind of get like this domino effect in the markets. But you get the opposite effect when stocks go higher, right? Stocks go higher, people start to say, okay, I need to deploy cash. I'm going to take my money out of the dollar and I'm going to put it into, the Mexican peso or whatever it is. And then they might, say, well, okay, I'm done deploying dollars. Now I'm going to sell my yen, so can you get further yen weakness if equities break out? I guess that's a question I wanted to ask you guys, because Ryan, you pointed out yields, may not be moving, but how about if the stock market moves higher? Do you think the dollar yen will continue to expand on that move? What do you guys think there?
Yes, it's I don't know. It's a difficult one. What I'm seeing in stocks, and particularly S&P, is consolidation. It's a bit of wariness. It doesn't really know where it wants to go. I mean, this is probably the longest consolidation phase we've had.
You're talking about the S&P consolidating, right?
Yeah,
Okay, but what I'm trying to ask is, how about if it doesn't? I mean, how about if it takes off? That's what I'm saying. How about if the S&P moves? That, but okay,
talking in the context of dollar yen, why isn't it moving while dollar yen's shooting higher? Why is it not moving now with everything that's going on? I guess I'm saying that it looks to be that stocks are maybe following rather than leading. I think that that's the point I'm trying to say right now. We've got everything going on in the world, and stocks are doing what? Going sideways, and they should be the ones that they're not showing risk on, risk off. So if stocks shoot higher, what I think it comes down to, what's the reason for stocks shooting higher? Is it shooting higher because the Fed is turning back on their hike path, or is it shooting higher because the economy is holding up? If it's shooting higher because the economy is holding up, that's a boom for the dollar. And then you're going to see dollar yen higher potentially on the dollar side rather than the weaker yen side. So it's really working out what would be the driver of stocks, moving higher through that resistance.
Yeah, well, I think the whole reason why the stock market. Well, go ahead, Dale.
Might be Friday's number.
Yeah, well,
CPI.
and we can talk about. Let's talk about CPI for a second as we're focused on stocks. I mean. Sorry, I would have
that could squeeze people that are short because of the inflation narrative.
Oh God, if the inflation, imagine if CPI comes in a little light. I mean, do you imagine like the amount of bullishness we're going to see in equities? I mean,
it peaked.
Oh God, we're going to see, the Fed's going to,
reverse,
shift gears. They're going to be a little bit more, they're going to allow for a little looser financial conditions. I mean, the S&P is going to rally hard if we have any type of blip in CPI. Now, you guys, I know, and I'm just going to say I am in the camp that we are going to have persistently high inflation for a while. So it's not, and it's not like, but it's not going to be like every print is a high print. I have a feeling that we're going to be sustained above like probably 3% CPI for a long time, like for years. But the reason,
great, it's going to moderate.
But you can't trade it like that.
No, you can't, and that's a great point, Dale. You got to be trading it like, hey, everybody's expecting. Well, you look at the data that everybody's looking at. Let's just go to Friday's data really quick, just to get a good gear or good. Sorry, it's it's morning and I don't know how to use my words. Year over year, market's expecting 5.9%. Let's say the number comes in at 5.8%. Or 5.7%. I mean, that's a good number as far as the market's concerned, right? It's not, hey, inflation hasn't disappeared, right?
Yeah.
And so I mean, if inflation comes in light, you're going to see, the S&P take off, and then what's going to move with it? What do you guys think is going to be the big mover aside from stocks? I think stocks, but what else do you got out there?
Good question.
Dollar?
Lower dollar.
Dollar no holla, right? I mean, I would, and I think actually the big movers, in my opinion, would be the emerging market currencies. I mean, everybody should know, especially in the ForexAnalytix community, and you guys probably know right now, I'm really laser focused on these emerging market currencies, playing them to the long side. I'm shorting dollar MEX, I'm shorting dollar rand, and if we see lower inflation data, I'm going to buy the heck out of these two currencies, meaning I'm going to sell dollars and buy these two. Do you guys have any other ideas of things that you'd like to trade on a weak CPI number? Because we're going to talk about a strong CPI number. So what do you guys?
I think euro dollar could be one as well, because obviously it'll be the day after the ECB. If they've laid a hawkish lesson on us, that's going to be well bid, and suddenly the divergence trade might grow or shrink rather if we start getting dropping in inflation. You're gonna see that divergence narrow again, and everyone's
what's the market anticipating? Kman might have a better clue of this. What's the market anticipating over the next couple of meetings? We're looking at the ECB coming out of negative rates, going to about 0.5%, 50 basis points higher, so a full 100 basis point swing, right?
Yeah, the market is trying to price in pretty hawkish ECB actually, including one or perhaps already even 50 BPs into the year end. So the overall sentiment is for 2 times 25 BPs hikes, and then 150 at least, and then perhaps another 25. That's roughly what's priced in now. But we also know those swings, so they might be swinging a bit hard for the time being. So the market's really anticipating that Lagarde is going to keep 50 BPs on the table tomorrow. So that's going to be, in my opinion, what we really need to listen to is what Lagarde is going to say over the meeting.
Definitely room for disappointment. But wouldn't you guys agree that this is a really nice bullish, that's a bullish pennant setup, isn't it? I mean, and Stelios, what do you have to say about this? Because I know you've been thinking that this is where the ECB swings, and you see that convergence of central banks where you have the Fed that maybe is not going to be so hawkish, and the ECB that might be hawkish. This is going to play right into your hand, right?
Yes, I still believe that this is what's going to play out. And also, we're so close to pretty important resistance. I mean, this at 108.1-ish level in euro dollar is pretty big. If we break that, I think we're going to 110 straight away. I do think, I know everybody thinks, oh my God, the ECB, they're never going to be hawkish. I disagree. And the market is pricing, what is it? They're pricing 150 plus hikes for the next 2 years or something like that.
No, shorter.
Until mid to 2023. Yeah,
probably a year out.
A year, yeah. Which sounds crazy, but I think it's very doable. And what I think is going to happen, for this trade to play out, especially, I actually like euro pound more than euro dollar, but I think they're both going to play out. Is that we're going to see this divergence between the central banks tighten. That's what I think. Yeah. It's not necessarily that the ECB is going to be overly hawkish, which I think they will surprise to the hawkish side, but I think the other side is also going to disappoint. And I think the pain trade is for this to go higher.
Yeah. I mean, how many people were just targeting parity just a few weeks ago? So I mean, and when you say 110, I want to show people how significant 110 is. And I know we talked about, I think we mentioned this chart every day, but this is a weekly chart. That's when was the euro created? What I know is in 2000, but when in 2000? guys recall? You guys are in Europe.
I should know this.
I'm just a dumb American. You guys should know this.
1998, right?
Was it 98?
Isn't it?
It had several stages of integration of different countries.
So when did we start to trade the euro?
I think in 1999.
1st of January 1999 was
oh my
stage
God. Let's
3.
go ask an Asian person. All right, let me go get somebody in Japan. I'll go. You guys hang on. Hang on.
Yeah, 1st of January 1999. There we go.
I'm going to bypass all of you Europeans.
118.20 was the first rate of the euro dollar.
Okay, thank you. So, look, but you see, we created that low following the creation of the euro. It fell initially, and then we held that low at in end of 2000. But you can see the underside of the trend line really comes in at 110. So when you, Stelios, when you talk about a rally to 110, I agree with you wholeheartedly that we could be trading up at 110 pretty quick. And then if we get above 110, I mean, that's going to be that's going to be a gnarly squeeze. I think that's going to be one of those that, you could really see it move quick. So anyway, but I wanted to point that out because I know it's we talk about a move to 110 and what that could do, but really it's all psychological after that. So then you get people preying on the dollar, saying it's the death of the dollar. Then we're going to get those articles again. You guys know how this whole cycle works.
I don't think we're going to start seeing that so soon. I mean, speaking about the death of the dollar just by breaking through here, I think it's too early. It's going to take more than
but
that.
you're going to start to get the dollar bears. I'm trying to point out that the dollar bears are going to come out of the woodwork. The dollar bears that have been in hibernation for the last 2 years, the ones that were really, you guys remember when we were trading at 120, back here, the euro dollar was at, or not 120, I'm sorry, way back pre-COVID. And everybody's talking about the dollar and it's going to hell in a handbasket. And then, COVID happened, right? You're going to get the reverse of that. It's just the psychological effect.
I think Peter Schiff still bearish to the dollar?
I'm sure he is. Every time I hear Peter Schiff, he is. And I heard a recent debate between him and Brent.
That's a rhetorical question.
Oh, okay. All right. And then the gold bugs are going to come out, and Stelios will come out of hibernation, and so will Steve. Just kidding. And Steve, good morning. Good to hear you today. Somebody asked me really quick. Richard asked, would this include the dollar Turkish lira? Meaning, would I buy the Turkish lira? And the answer to that question is hell no. No. Yeah, and you could talk to the Greeks that live right next to Turkey. What has to happen for me to buy what has to happen for you to buy the lira? I know for me what has to happen. What do you think has to happen?
Erdogan has to go. First of all,
he has to die, right? He has to die or go away.
Greece.
Erdogan going is the first part of the equation. The thing is, who's going to replace?
Who's going to replace? Yeah.
Yeah. So talking about invading you guys this summer.
But,
yeah.
If he was gone, like if he just, heaven forbid, he had a, heart attack or something, or he was gone, I would immediately buy the lira and then figure it out afterwards. But that would be the only case at this point. So if you're asking about the lira, no, thank you. So hey, we got a few minutes coming up before Dale brings on his guest. How do you guys feel about the markets where they're currently at? I mean, we got the ECB tomorrow. Obviously we just, beat this one up. You can see we're right in this triangle consolidation. We got CPI coming out and actually India, they raised rates overnight. So here we go with more central banks raising rates all over the place, leaving Japan out in the cold. And you got the dollar yen racing to new highs right now as we speak. We're almost at the 161% extension. So what say you guys? Do you fade it here?
I see no reason.
It's not easy to fade. Yeah. It's not easy to fade.
Okay, all right. That's what I thought. All right, and
but it's not smart to chase either, right? I mean, somebody that doesn't have a position, trying to buy it up here is also not a smart idea, right?
Yeah, I know. And you know what? I've said that for the last 3 days in a row. I continue to prove myself not so smart by not chasing it. So, but it'll be the moment that I decide to get long dollar yen is the moment that it will go down. So, and I'm very well aware of it. So I will not chase. what do you guys think about the S&P? Do you guys, and we'll just talk about stocks in general. You got, the Dow that's just consolidating. You've got the NASDAQ that's just consolidating too after, completing the AB equals CD move. What do you guys do with stocks here? Do you think, okay, I can ask this question again, 4,300 or 3,800? What do you guys say? Come on, that was our, you guys aren't going to fall for that this time, are you?
I don't know. My intuition tells me that there is a decent likelihood for another push higher before we, the wheels go off the bus again.
Okay. All right.
That's the decent answer, Steve. Well done, man. Yeah. That's the one I gave the other day as well.
Do you think
man, you're like the Ellen Greenspan of ForexAnalytix.
Do you think that the S&P can do the unthinkable and see the 200-day moving average again? Do you think we can get all the way up here again?
It's not going to be at all easy. Nothing is impossible, but I think it's a low probability scenario.
Really? Okay. Low probability. All right. So low 200-day is out the window for Steve. Anybody else have?
No, I didn't say it's out of the window. I said it's a low probability scenario, and I believe it.
You're moving the goalposts again, Blake.
I am moving the goalpost. Well, we move higher towards my goalpost, so I'm trying to give you guys a little bit of edge here. So do we see?
And then you move up to 44, 45. Oh, come on, give us a chance.
All right. Hey, look, I actually agree with Steve wholeheartedly here, because I do believe that all of this like very, very high traffic area is going to be very difficult to get through. I mean, you got a 50% retracement, 618 retracement, spike highs up here. By the time we even get there, if we get there, I mean, you're going to have the 200-day moving average slowly moving lower. I think it's going to be very difficult for the markets to make it much higher than 4,300. But, that type of attitude by me, being, just a trader, just a participant in the markets, that general attitude is probably the reason why it's going to go higher.
I think the acid test will be, guys, if the bonds, which may have completed 4, and are on their way, they're in 5 now, and TLT example could make new lows. Jim talks about it. That'll be the real test for everything. What's going to hold up as bonds make new lows, 30-year yields make new highs, but maybe some of the shorter term instruments don't.
Yeah. Have you, by the way, that's a great point, Dale. And I forgot to mention, do you guys see like the Shats and Boons and holy crap. I mean,
there's more pain there. There's more pain
screaming higher in Europe. Holy cow.
Yeah. They're leading us now. So put up TLT, which is a 20-year, or put up the notes.
Yeah, I mean, there's a 10.
I think
they're holding.
Blake, I think from a fundamentals perspective, the toughest thing to do is decide which side of the Atlantic is more screwed, honestly, for different reasons, right? Each side has some common and some unique problems, right? Everybody knows the obvious problems that, the Eurozone faces, right? Yeah. US has different set of problems, horrific fiscal situation. On the other hand, Eurozone has the problem with different countries that, in essence, function in different speeds, and the need of without having fiscal common policy, and on the other hand, needing some kind of monetary policy that will not, will not let the weakest links break, and that is why we see what we see, right? I mean, supposedly, I remind you that the ECB went into this type of monetary policy that we currently have because their complaint was that inflation was too low. Supposedly, of course, that was an excuse, right? Because the actual reason was that, several countries were bankrupt and they needed a lot of support, not to go under and take the rest with them, right? And the proof that this all was a lie, because we went through the 2% that they wanted to be, below in inflation, and now we are at 8.1% Eurozone inflation, and the ECB is still applying the same monetary policy that it did when it supposedly had a problem of very low inflation. Because the problem was not low inflation ever. The problem was that some countries are completely bankrupt.
Right. Well, you know what I have to say about that, Steve?
Yeah.
Hold on.
Greece is one of those countries.
Oh, obviously. Greece is one of these countries. Greece, Portugal, Italy.
You're to blame. Stephen Stel are to blame for this mess the ECB are in.
Yeah, I've been spending, sorry.
Mostly Stelios. He's been spending billions and billions on an annual basis.
Exactly. You would know the country's bankrupt. The amount Stel's spending.
All right. Well, it's I'm gonna go dig my hole and stick my head in the sand now that Steve has come and rained on my whole outlook of life for the next 20 years. Well
done, Steve.
Thank you, guys.
I'm gonna go shoot myself. I'll be back. You guys.
Wait till he visits you.
Good thing for you, Blake.
I'm gonna bring a lot of whiskey for myself. I know Steve doesn't drink, but he's gonna start talking to me about like monetary policy and
hey, you're the lucky one.
I'm just gonna get drunk off.
You're the lucky one. You have access to guns. You can actually shoot yourself. Indeed, we have to drink ourselves to death.
All right. Well,
hey guys, I'm a little concerned. I can't reach Peter Goodburn. And
you can't
really?
Yeah, and he before I sent him a Skype, he hadn't been there for days, which is unlike him. And then he saw my Skype, and he didn't really respond. So I don't think he's going to be here, and I'll find out what's going on with him.
Oh, we get more Debbie Downer, Steve. Well, hey, Steve, continue on with your conversation. I'm going to go grip my noose.
Forex guest hunter. That's right.
Hey, Dale, if you want to go look for him for a few minutes, we'll continue on this conversation for a little bit longer.
Okay.
No, but Steve, going back, like jokes aside, going back to your conversation, I actually believe, I agree with you. I mean, we're in a bit of a pickle here globally, but when you look at stocks, and this is one of the things that I try to remember because it's something that we often forget. Is the stock market doesn't necessarily equate to the economy, right? It doesn't. I mean, it does to a certain extent, but you have to remember it is the stock market. And unless there's like a panic of some sort.
There is a lot of truth to what you said, but not right at the same time as well. Yes, the stock market does not equate the real economy if and when, which is what we've had for several years now, there is another element fueling the stock market, right? Because if there is no intervention and the stock market is left to freely, do what it needs to do, then it is very highly correlated to what the economy does, right? But when you have a weak economy, and in order for a government and governments to try to compensate to that, they go bananas having to do with monetary policy, and they flood the system with cheap credit and easy money, then yes, you can see a big divergence between the performance of, and at the same time, by the way, take away the safe method of investing, which is what? Owning bonds and fixed income, right? Then yes, you get the stock market completely diverging from the fates of economy.
Yeah, and just remember, guys, as of right now, we do not have support of any central bank, minus, I guess, the Bank of Japan, but there's no real support anywhere. I'm sorry, Dale.
China's easy.
I guess China, yeah.
But it's opaque. Who knows? But FXI has been acting okay.
Yeah, well,
I could never buy.
I think that's because China is trying to reopen, right? So FXI has done a little bit better, and I actually think that this is, we've had so many years of deleveraging out of China that China might actually be a decent place to be at right now in this environment. But did you find your guest, Dale?
I can't. I don't think Peter's going to be here.
Okay. Yeah. I mean, that's odd. He's been with us.
They're very odd. That's why I'm worried.
Probably
I hope he's
20 times. Yeah. Hopefully he's doing all right. So, yeah, I know you've had him as a guest so many different times. So anyway, all right. Well, guys, I want to ask some final closing thoughts. Did Stelios, are you still here?
He's on a catamaran.
I'm handling some admin, but I'm here. Yes. Hello.
He's spending.
Stelios, let's start with you so we can sign you off for the session. Any last minute thoughts on things that you should be looking at for today's trading day? Give me an actionable item. I need to buy what? Give me a guaranteed win.
You're putting on the spot here. Buy what? What do you mean? On which event? I mean, we don't have.
Tell me what to buy or sell. Damn it! Just give it to me.
I would buy euro dollar on a break of 108.1, but that's not there yet. Oh, it could happen today.
That's not going to do me any good right now. All right, fine.
Sorry, man.
I'm just trying to get some out of you. All right, fine. Yeah, I mean the euro dollar actually just hit resistance. If you guys are ForexAnalytix subscribers, you knew we were right up against resistance right here, and we're challenging channel resistance, triangle resistance. So it's rejecting it. So big resistance ahead of the ECB. Thanks, Stelios. How about you, Kman? Give me something to buy. What do I buy?
Buy euro sterling dips.
Whoa, I like that. Now we're talking. So we're buying euro sterling dips. Now I guess,
or as long as 84.80 holds, I think and then we need to monitor 86 very closely, yada yada. But as apparently yesterday's sterling rally has been attributed to some M&A activity.
I'm sorry, what rally?
The cable rally yesterday, sterling rally yesterday was apparently due to some M&A. There's a few M&As going on in the UK. Apparently, some of those flows went through. That's what Harry Hindsight whispered to our ears today.
Got it. Hey, I want to ask you guys really quick, and Ryan, I'm gonna ask you what we need to buy or sell today. And by the way, I think the 86 pence level is huge for the euro sterling. It's obviously been a problem. Every time we get up here, we just get slammed down. So, but you notice how we're making lower highs. So that's obviously a bullish sign for the pair. But one of the drivers of the dollar has been, the dollar higher has been the dollar yen. Obviously, we are almost at the 161% extension. Let's just say if this happens, if the dollar yen stalls here and starts to pull back, is that going to be bullish or bearish for the dollar across the board? Because it has been the predominant driver of dollar bullishness, which hasn't been very bullish, right? So what do you guys think regarding that?
I think it's not only dollar yen driving, it's the rest of the world central banks are getting more hawkish. So the rest of the world interest rates are rising. You just showed the Bunds,
right?
Bunds a while back. It's the rest. It's a global yen sell-off because the rest of the world is also hiking or going to hike. In ECB's case, we're looking at the euro yen. Apart from against sterling, I'm not yet a big euro fan. But then you can't look beside the euro yen. That thing has gone skyrocketing too, even if ECB hasn't even started.
Hey mate, I have a question for you. Since you are more into that continent, what do you think the end game is for the BOJ?
My opinion is that sometime this year they have to start to normalize, or at least give us a hint that they are going to widen the band on the YCC. They are going to scale back some of their ultra easing measures, because they are not only doing YCC, they are doing a bunch of other stuff as well. Under which buying ETFs and buying REITs as well. I think they have to scale back on something. And the yen level gives them as well a good reason to start to scale back. So I think they will do something. Will it be enough to stop the yen from weakening? That remains to be seen. Imagine that oil goes to $150. I mean, that's going to be another weight on its shoulders, right?
Mm-hmm. I think
I really fear that yen is going to weaken another 10-15% over the course of the next 6 months to 9 months.
I'm also afraid that the situation in Japan might get out of hand sooner rather than later with how things are moving.
Why do you care so much, Steve? You're not even anywhere near Japan. You're not going to Japan.
What would
So
the market implications
you know
be,
something,
Steve?
if they let the yen, get completely unhinged, I might actually be thinking of visiting Japan. Why not? It's going to be very cheap.
Right. That's a great point. That's a great point. Greeks in Japan.
I do think they will intervene at some stage because the speed is getting a bit too high. But will they reverse it? That's very much my doubt. If nothing else changes.
The main question is,
Can they do anything?
Exactly. Can they actually reverse policy even if they want to? That's the biggest question. And that doesn't only apply to the BOJ. It applies to every single central bank. For example, the Fed is now supposedly trying to fight inflation, right? The question
the Fed is okay because they have the political support.
They have the political support, A, for now, B, for limited interventions, right? Because when inflation is at 8.5%, will rates of 2.5, even 3%, let's assume they get up to that, fix the problem? I have a very big doubt about it, because real rates will remain deeply negative.
Mm-hmm.
Let's see. It's going to be interesting.
It is going to be interesting. Look at the
yeah. The problem is with between the correlation between real rates and currency moves is a correlation, a sporadic correlation at best, because real rates, dollar yen should be trading probably around 100, because the inflation minus the Japanese real rates are still -2%. If you look the US real rates, they are what, -5, -6.
But
so
theory, a lot of people miss the main point here. And what is the main point? Is that since real rates are negative almost globally, we might be seeing FX moves and just tunnel vision on them. But what is the most important reality that is happening around there is that all fiat currencies are actually losing purchasing power very fast.
Yeah, but
that's the biggest issue to address.
Okay, but you don't trade FX,
yes,
on a day-to-day basis on the back of that, right?
But
as a general investment thesis, people should be aware of that.
Absolutely.
Yeah,
absolutely agree.
All right. Well, hey, Ryan's been waiting patiently to tell people what he would be buying or selling right now. So if you guys could excuse this conversation and take it into the bathroom. Ryan, what do you say?
Well, I was going to say you need to buy insurance on Steve's new world monetary order that's coming.
And how do you do that? Buy gold?
Yeah, buy gold, stick it under the mattress, stick it in the garden, stick it in the teeth.
Buy Dogecoin.
All right. Well, no, jokes aside, and by the way, very, very great conversation with you guys. But no, Ryan, what ideas do you have for today? What are you thinking?
I'm thinking keep an eye on euro dollar. Could get a bit jumpy as we head towards the ECB. If we do get a break before the ECB, be very careful with that. You've got to wait for what happens. Right now, today, I'm just mainly looking to scalp dollar yen against the big figures. I've just had a failure of 20 pips against 134. If we get to 135, I'll have another scalp up there and see how that one does.
All right. Ryan, I'm glad you brought that up. One of the conversations we had yesterday with if you guys are not ForexAnalytix subscribers, we do private, shows for the community. And we have the Morning Edge and the Daily Roundup. One of the things I talked about yesterday, and I know you weren't on those shows with me, but is exactly that. We have to be careful if the euro dollar sets up for a breakout ahead of the ECB. So let's say we make it to, let's just call it 107.70 today. And then the ECB comes out, or Christine Lagarde comes out and she's just her dovish self, and we break down, that's going to be a massive breakdown in the euro, big time. That would be a big failure if we come out of this triangle and then we reverse, or vice versa. If we move lower today and we crack this support, but then she comes out tomorrow extremely hawkish, then we'll get a massive breakout going the other direction. So I think that is a definite risk that I think everybody should be watching for, between today and tomorrow. So tomorrow at this time, we're going to be listening to her press conference. We'll be here through that. Steve, Kman, Ryan, Stelios already cut and run. Dale, anything else before we wrap things up for the day?
Yeah, if there's a pullback, I'd buy a break in silver to, around 22.30 to 10, and gold 18.20 to 18.10.
Oh, look at this. Well, you got a little, talking about silver really quick, Dale, since you brought it up, little false breakdown below those lows right there.
Oh, they're turning it. Okay.
Yeah, I mean they pushed right below the lows, and that can set up for a reversal there. And gold.
Well, those are the kind of trades that you do them if they happen. Count on them. I have a core position, but I'd add on pullbacks down there.
There you go. All right. Well, I like it, and I want to say I hope Peter Goodburn is all right. He's always a really great contributor to our community.
Is a great guy.
If you guys haven't checked out the Trader Funding Program, make sure you do so. We just enacted the $1 million accounts. They have now been initiated. So I know people have been waiting for that. We have had two traders? I have to confirm with Stelios. I think 2 traders went to live trading accounts after passing their assessment this week, which is awesome.
So if you want to learn how to,
I'm sorry, Dale.
It's happening every week.
It is. Yeah. Oh, every week. Yep. Absolutely. And we get assessments that come through, and it's a great way for people to not trade their own money, come trade ours, or don't put their own money at risk. And we've been able to find some pretty good traders as a result.
Yeah,
so
come
check out the Trader Funding Program, and then you also get ForexAnalytix for free for a period of time in the community, and I should mention that you have unlimited time for the Trader Funding Program. Unlike a lot of other programs, they give you you got 28 days to pass this.
28 minutes.
Or whatever the days is. I actually know people that have been going through the program and the same assessment now for the last couple of months, and they're just slowly doing it the right way. They're slowly just chipping away, making a few gains here and there, only taking the right trades when they see it. And that's the way it should be, because you shouldn't have a time restraint when you're trying to.
We don't play beat the clock.
No,
remember that
because
show?
You're gonna take crappy trades. You're gonna be forced to take crappy trades. We don't want you to do that. We want you to make good decisions and have a community wrapped around you to give you some good ideas and some support. So anyway, check out the Trader Funding Program. Dale, I want to say thank you so much for a great show, and like I said, I hope Peter is all right. Ryan, Kman, Steve, thank you guys.
Okay, guys. Everyone.
Thanks,
thank you, Dream Team. And don't forget, don't just count your pips, count your blessings. Join the family, surround yourself with traders better than you. I have. And that's a wrap, everyone. We'll see you tomorrow. Good hunting, and the team in 27 minutes, you could join the Morning Edge. Adios.